Good morning. I'm with Terry Harbort, CEO of Talisker Resources. The symbol is TSK on the TSX. And Talisker has had a busy summer and lots of news flow, including confirmation of first gold sales earlier this week, $2.3 million US of gold sales for a total of 707 ounces sold. And things are starting to ramp up at Bralorne. So, Terry, how are you today?
Oh, Robert, I'm pretty good. It looks like all the stars are starting to align. We've made it into our first production. We've seen all-time high gold, faced all of our challenges and succeeded. So yeah, pretty happy with the outlook.
It's amazing how sometimes, especially in the mining industry, it doesn't matter, until it matters, and then it can matter a lot. And I feel like that's what the story of Talisker here is in 2025. The first 6 months, you had some, a few ups and downs in the share price, like the gold price, and then we just took off there in August. And the timing of ramping up at Bralorne couldn't have been better with a gold chart breakout, quite frankly.
Yeah, I'd really love to say that I'd planned it perfectly to be like that, but that'd be an out and out lie. It's looks like serendipity with the increase in gold prices just happened to parallel when we happen to be going into production. It certainly helps our revenue numbers, and I think long term, I think we're all probably committed that this is a good gold tape. That this is quite sustainable for the next few years to come. So it allows us to reevaluate what we think is a really good project and have a look at, well, how can we expand? How can we accelerate our production profile and really capitalize on this high gold price? And that's really what we're looking at now that we've got through the first big hurdle, which is getting up and getting into production. Now the focus changes into, all right, how can we accelerate that production? How can we look to build a second mine?
So you announced 700 ounces gold sales, about $1 million and change in revenue. How does that? So basically, is that the run rate that we should expect per month for the next few months, or is that going to ramp up more?
Oh, we're slowly ramping up as we go. Our plan this year was always to be around the 100 ton per day, so test scale production, if you like. We've actually surpassed that already. We're up averaging about 200 tons per day, and we expect here by the new year 300 tons per day. So as we've discussed before, our plan was to take a conservative approach, understand that we understand how we're mining. We understand what the rock mechanics are like, what the blast the blast pattern and results are like. So we don't get too far out of ahead of ourselves. So it seems like that we've gone through that quite successfully. We're finishing our third stope now, moving on to our fourth stope. So now I think we can confidently start that ramp up. So with that first gold sales, you're right, 700,000 ounces, about 2.3 million US and change. We expect that along those same rates for the next month or two, and then we'll see that ramp up as we increase that production. And our longer plan here is by mid next year to be at 500 tons per day, so effectively double what we're going to be at coming towards the end of the year. And then by 2027, moving to the 750 and 1,000 tons per day. And really by then, we expect to have everything well nailed down, well understood, and everything to be running like a well-oiled machine.
So you talked about now with this $3,800 gold price environment, you are a real mining company now that's generating millions of dollars of revenue per month. The question becomes, how do we continue to grow? What can we do to make this asset more valuable? So what are the different ways that Talisker can grow and make the Bralorne asset more valuable?
Well, really, Robert, we're looking at a multi-pronged approach here. three or four key things that all come together to really build a very strong value proposition and growth proposition over the next 5 years. So the first one of those is us looking to add additional resource, and our modelling team's been working for a considerable length of time, over a year now, at validating a lot of the historical work. So a lot of this is done when the mine was originally in production, so it's not compliant with our current standards with the SEC. So what we need to do is do a lot of validation work, the location of that work, finding old assay certificates, finding the mapping and digitising it. So the team's done a great lot of work at that, and now we're working with our external QPs about being able to bring that into an updated resource statement and also bring that into a future mine plan. So we're hopeful here that we can look to add another, 700, 800, even up to 1 million ounces into our current resource. So to take our global resource somewhere in the realm of 2.5 to 3 million ounces. Part and parcel with that, we've been working for some time on the design and scoping of our second mine, the Olympus mine. That'll be several kilometres to the south of where we're currently operating at Mustang. And we're looking at there basically chasing the same sort of production profile as Mustang. So 750 to 1,000 tonnes per day. So basically effectively double what we're looking to do here over the next couple of years. Integrated with both those scenarios is the ore sorting technologies that we've spoken about before, and we're finalising the studies now and looking at building the facility, ordering the equipment and installing that equipment. And we're hopeful here sometime around Q2 we can have that in, and it has a couple of immediate impacts basically on reducing the amount of material that we need to ship and mill. So they're direct impacts. We're hoping 40 to 50% reduction in those costs, but it also changes our mine plan by effectively doubling our grade and halving our cutoff. So it brings a lot more material back into our mine plan and back into our resource. And finally, after we've done those three things, that builds into the design of our own milling facility and the implementation of that, and then really building us up into a significant multi-asset producer, swapping out milling remotely, Lord, at what we're doing now into our own hub and spoke scenario.
So you said that you're advancing into your fourth stope currently. Is the mining right now just on one level, and when will you advance to second and third level, you think?
So we've basically mined out and backfilled between the 1060 and 1075 levels, which was the first area where we started. And we're currently drilling and blasting between the 1075 and the 1105 levels. And we'll basically continue to work up another 3 to 4 levels. We're also working now, developing down below the 1060, and that will open up the 1135 and 1120 levels, so another 2 levels additional. So basically we'll have us mining on 7 levels by then at the Mustang mine.
Oh, wow. Okay, that's impressive. So when you get to 7 levels, then suddenly the run rate is going to be a lot more than 100 tons per day. Then we talking more like 300 to 500 tons?
Yes, I think that'll take us to about 300 tons per day, and we'll be initiating our development across to Bralorne West, and we expect that to be done late this year or early next year. It opens up 5 new veins that we've planned out mining on 30 levels. We'll be developing 2 spiral declines there that'll basically give us, if on 5 veins on the level, about 20 working faces. So developing 2 levels of east and west on each vein, and then on multiple levels. So that really opens up the gate for large scale production. So once we've got those declines underway and the development done, then we'll be looking to move towards 500 tons per day and then beyond.
So the 500 ton per day goal, is that still the goal for, mid, next year?
Yes.
Okay. So 500 tons per day at 11, 12 grams per ton gold. I mean, we're talking about monthly revenue. I mean, even if we have a conservative gold price, we're talking about more than $10 million a month. That's a big deal.
Yeah, absolutely.
That's a big deal. So let's talk about the share price. That's the goal. And if that goal is achieved, what sort of valuation do you think is reasonable to put on Talisker? Because I mean, like, obviously it was 50 cents a share in the middle of the summer. You did a financing at 50 cents. Now we're at $1.30. Some people are going to be thinking, I've got a nice profit. Should I take the profit? But what's the upside here, Terry?
Well, I think it's fairly clear, and without wanting to discuss too detailed economics, I can paint a simple picture that if our grade holds and we're at 750 tons per day, then we should be making those revenue figures that you're talking about. So it's nearly half or more than half of our market cap in revenue. So it's a pretty good value proposition, I think, as we continue to grow. And really, that's just what we're doing in the next couple of years. We've got a very consistent growth plan here to continue to ramp this up. And hopefully, in the next couple of months, I'll be able to talk to you about our planning to bring our third mine online. So that's the growth profile we're looking at here, a multi-asset producer. We've got work to do. We've got to drill out resource. We've got to do mine plans. We've got to do permitting. But the pathway's there, and it's about execution, and that's what we've got the team lined up to do.
Did you just say third mine?
Well, we're starting to have a look at that right now. Our focus is to bed down Mustang, start the planning and development of the second mine, and then really start to have a look at where would we locate the third mine. And we've got some pretty good ideas right now. We've got to have a look at access and geomechanics, and then look very soon to start drilling out mineable resource there.
All right, very good. Final question, Terry, and then I'll let you go on your Friday. Exchange traded funds. We've had a big move in the gold sector in 2025. Silver stocks are going absolutely parabolic here in September. And these ETFs, they control a lot of capital, passive flows. I got to be thinking that Talisker is getting close to being a candidate for inclusion in some of these ETFs. What can you tell us about that?
Oh, well, it's all depends on market cap and trading volume. And really what we're seeing now is a very solid and what looks to be a sustainable momentum behind our stock movements. We're sitting quite comfortably here at the 180 to 190 million market cap. We're seeing $1 to $2 million worth of shares traded on a daily basis. So we're seeing good, consistent volume. So I think that really starts to build into taking on to inclusion in these funds. And of course, continuous production that lifts you up out of the explorer, developer, and really places you solidly in being able to be placed into these particularly developer funds, developer and producer funds.
Terry, thank you so much for your time. Cheers.
Thanks very much, Robert. Bye-bye.